everyone. How y'all doing? How's everybody doing? Come on in, come on in. It's Wealthy You Wind Down Wednesdays. A mouthful, but I'm excited to be here. Where are all of my new Wealthy You sisters in the chat? Let me give you some shout outs. If you posted tonight, I definitely want to give you a shout out because listen, I know I wasn't at your orientation, but I hear that you are excited, you're ready to go, and you're ready to win this year. And so this year, it's all about leveling up because that certainly is what Wealthy You is doing. And we want you along on the journey. We want to be on your journey to wealth. So come on in. Let me know who's in the chat. Let me know if you're just starting. Make sure everybody is muted. And we're going to have a conversation tonight. Now, tonight's topic, by the way, is investing in volatile times. How many of you know what volatility is? How many of you know what volatility is in your portfolio? If you're not muted, please mute. Or either Deprina, if you want to mute everybody and then I'll come back in, I can do that. If you can't see who's muted.
I got everybody muted. I don't know who phone that is.
Okay, well, let me see. Let me come off gallery. Let me just see who that is. I have no idea. I can't see anybody on. Oh, yes, I do. I got it. Okay, so I just muted it. That should have done it. Well, no. Okay, guys, I need y'all to mute yourself. Okay, I have no. Oh, I see it. Okay, I think that's muted. That's everybody.
Yeah, I know who it was. I got it.
Good?
Yep.
Okay. Sorry, but we want to make sure that so make sure you mute your phones, lady. Let me just take it back from the top. Good evening, everyone, and welcome to Wealthy You Wind Down Wednesdays. That's right. Come on in. I want to give a shout out. This was a large group who came in. So come on in, introduce yourself in the chat. If this is your first time on Wealthy You Wind Down Wednesday, definitely want to give you a shout out. So good evening, everyone. I'm Deborah Owens. I'm founder and CEO of Wealthy You, where we help Black women build their first portfolios to 7 figures and beyond. And the exciting thing is that, week to week to week, we see women hitting their first 6 figures, their first multiple 6 figures, their first 7 figures and beyond. So I'm excited about that. But what's really exciting is the volatility in the stock market. Now, that's what the topic is this evening: investing in volatile times. And so tonight, what I really want to do is level set because I know this has been quite the whipsaw market. In fact, someone on Twitter was saying, looks like the market has made a correction. And I said, well, it's a little too early to say that yet. But in Wealthy You, we really don't fear volatility. In fact, we embrace it because that's all about what you do when you're shifting to a wealth mindset. So let me see who is in the chat so I can welcome all of my new Wealthy You sisters. First timer, well, hello, Lisa. Welcome, welcome, welcome. Welcome to Wealthy You Wind Down. Yvonne from Westchester, from Alabama and Texas. Okay, Pamela, I got you. Lucia, welcome, welcome, welcome from North Carolina. Excellent. So glad you joined. Let's see who else is in the house. Tanya, welcome. Good evening from Terry from Birmingham, Alabama. That's right, Terry. It's great to see you here. Hey, but before I get started, I've got to invite all of you to get a glass of your favorite wine, vino, or if you don't drink, get a glass of water or sparkling water. But it is Wealthy You Wind Down Wednesday, and whoo! After a week like this week, I think we could all have a little libation. So, a toast to all of you. But let's get right into it. But first of all, how many of you know that we got a lot going on in Wealthy You? It's a lot going on, and we're excited about it. And one of the reasons we're excited is because of this. Watch the tape.
Don't you think it's time to get wealthy? I'm Deborah Owens, America's Wealth Coach, and my new show on the Black Star Network focuses on the things your financial advisor or bank isn't telling you. So watch Get Wealthy on the Black Star Network.
Hey, 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 that's it, that's it. Hey, did you guys see? I was interviewed on Roland Martin Unfiltered, and it was all about Wealthy You and getting wealthy. And all I want to say is that what I'm most excited about is that many of the women in Wealthy You are being interviewed on Get Wealthy. And the whole focus of the program is really to share what we call in Wealthy You the new financial blueprint for Black Americans, because the truth is the financial roadmap, the financial blueprint that we were given simply didn't get us to the destination. You know it. You got all the college degrees. You did everything they told you to do. How many of you feel like you did everything you were told to do, and that you still should feel like you should be further ahead, right? Are you feeling like that? Well, here's what I want you to know is our mission at Wealthy You is to help 1 million Black women get to $1 million in net worth. However, it's not the money, it's the mission. Because one of the things that I know after coaching thousands of women is that the reason that we are not further ahead is because the most important asset that we could have been given, the most important knowledge that we should have learned in our formal education, we didn't learn. And in the chat, let me see if you know what that is. What was the most valuable skill that you needed to acquire, but you didn't get access or exposure to it in your formal education? In the chat, let me see if you know what that is, right? What is it? What didn't you receive in your formal education? Money management, that's right. But even more important than that, what you didn't receive is the skill of how to actually build wealth. I want you to get that, because that was the insight that I really learned, through my decades, really, of a career in financial services. First, when I got there, I said, how come I had never been exposed to it, right? And then as I went on in my journey and began to consult and advise high net worth clients, I realized that the reason they had a leg up and I didn't was someone in their family. They were not first generation investors. They came from inherited wealth. And so because of that, if you walk in the door of any financial services institution and you are not considered high net worth, then you don't get access to any of the knowledge, the type of knowledge that you're going to learn in Wealthy You. And that's how to analyze and research stock, how to analyze and research mutual funds, how to build a portfolio that stands the test of time. And so that's a great segue into the topic this evening. And so the topic this evening is investing in volatile times. And so how many of you have been watching the market go up and down, and then went and looked at your 401k or your retirement statement or your IRA? How many of you did that within the past past week or so? Because that's really when we've seen, a significant decline. In the past 7 days, have you looked at your portfolio, ladies? Okay, and then so the next question I want to ask is, when you looked at your portfolio and you saw that it had declined, what was your reaction? What was your response? What was your response? I'm looking in the chat. Woo, that's right. Margaret said, yes, Lord, right? Okay, so need to buy more shares. Okay, so here's what I want to kind of set the stage and tell the story. As I was preparing for my conversation with Roland Martin on Filtered last night, Roland and I go way back. In fact, I knew him when he just started his career in journalism. And, my husband is a journalist, and we would all be at the National Association of Black Journalists convention. And Roland, we would be playing cards, girl. We'd be playing spades. And when you're with a lot of journalists, there's that whole cerebral aspect to it, right? Where, you're talking about current events, politics, and I had the good fortune of just being around some amazing people. And that's really how I met Roland. And, Roland, when he found out I was in investments, oh man, that dude, we would be chopping it up to all hours of the night talking about investments. And he said to me one day, he said, you know what, Deb? When I get my show, you gonna have your own segment. And sure enough, when he launched his show on News One Now, I had the opportunity to really start Wealthy You, right? The Wealthy You segment. How many of you ever watched the Wealthy You segment on News One Now? I'm setting up this conversation, all right? So, yesterday, we're about to launch this new show on Get Wealthy. And so we've been taping for the past 3 months, and many of the people that you're going to see, that's right, on TV One, and many of you are going to see some awesome interviews. And you know what? A lot of you are going to know these women because they're women who are in either the Wealthy You Society or the Legacy Wealth Accelerator. Well, anyhow, so Roland says, Deb, I got to get you on my show because, we're going to be running your promos all week. And then, I had just texted him. I said, man, Roland, this market is really volatile. You want me to come in? Boom. Next thing I know, last night, I'm booked to be on Roland's show. And so in preparation for that, one of the things that I went back to is anytime I'm interviewed, typically I have notes, I have research, and I have stats, and they're in my file, so I can just kind of, go in my little finder and put volatile times and it'll come up. And so lo and behold, I put in investing for volatile time. What comes up but News One Now, tips for investing in volatile times, right? So the market at that point was at an all-time high. And in 2014, what do you think the Dow Jones Industrial Average was in 2014? It's 33,000 now, just near 34. I can look and see what it closed at. But at any rate, Just guess. What do you think the Dow Jones Industrial Average? What number? What number was it at in 2014? Anybody want to guess? 17,000, 14,000. And the winner is who's that? Stephanie, who's SB? Whoever SB is, you won it. It was 16,379 and it closed today. Who can tell me what the market closed at today? If you're in wealthy, you should know that. Well, maybe not, because I tell you not to look at it every day. So it closed at 34,168. So the point that I wanted to make with him last night is that the market is double what it was. And you guys know the rule of 72, and it doubled in 7 years, right? So if you think about it, rule of 72 says divide the rate of return that you're earning, and that will tell you how long it would take your money to double. So if we were to just look at the compounded average annual return on the Dow right now, it's probably averaging about 13, 14%, right? Or 12 goes into 72, 6. So in 6 years, it would have doubled, right? Oh, that was Suzanne with your bad self. Okay, Suzanne. So the point I want to make, now here's the other thing. What has happened in that same time? What happened with interest rates? What happened with interest rates? So from 2014 till now, did interest rates go up or did they go down? Did they go up or did they go down? They dropped, right? And they dropped precipitously. And literally a year ago, and everybody in Wealthy, you knows, everybody a year ago, actually right at COVID time, when COVID hit, they stimulated the economy. Interest rates went almost to zero, and you could get a 30-year mortgage for 2.5%, 3%. And ladies, what did I tell you to do at that time when interest rates were at their all-time low? What did many of you do? Right? What did you refinance? Right? Because I said, don't look a gift horse in the mouth. We may never see these interest rates again. And so what did you do? And see, all I'm going to tell you is that fortune goes to people who act fast. Are you with me? Like, fortune rewards speed. Is this making sense to you guys? Fortune rewards speed. Okay? So all I'm going to say is not too late, because, if we look at historical, 10, 20 years, interest rates are still low. But what is happening right now, and the reason, and this is my long way again, I know I kind of peeling the onion, so just stay with me, y'all. Stay with me, okay? So interest rates went down and the market went up. And historically, that's exactly what happens. And that, I want you to get this, that is why the Fed lowers interest rates to stimulate the economy. That's what economic stimulus is. Is this making sense to you guys in the chat? Let me know if this is making sense to you, because I want to explain volatility to you, okay? So now, COVID hits. Now, think about it. When COVID hit initially, what did the market do when COVID, in March of 2020, what did the market do? Did it go up or it went down? What did it do, ladies? Initially, it went down, and it went down, whoo! You guys remember that? It went down about 30% in a matter of days. And if you were in Wealthy, what did I say to you? I said, you're not investing for a day. And the most important thing about volatility, what really makes things volatile, is uncertainty, right? So here's what I want you guys to understand. what is the uncertainty that is driving everything right now? What is the uncertainty that's driving everything? Yeah, we in class. This is Wealthy You. We call it Wealthy You because you gonna learn tonight. Okay. So COVID. That's right. So that's where all the uncertainty is. And the bottom line is that I don't know about you, but I was making vacation plans. I was planning out, we were supposed to be in Atlanta at a conference. Napa Jazz Festival. They canceled it last time. We went anyway. We kept our tickets. We said, oh, well, we'll just go next year, right? And lo and behold, you know, I could get mad, but you know what? Listen, I'm not mad because I'm alive today. I want y'all to get that, right? Like the fact that all of us are still standing is a blessing. Y'all with me? It's a blessing because many folks are not here. And this disease is, I mean, it's just so random, right? This virus is so random. I mean, you can literally get it by just sitting down and eating something, right? So I'm not getting off topic, but I want you to know is that anytime, so because of COVID, what is happening to companies, right? What is happening to companies? You got supply chain craziness. They can't get goods and services. They're not being shipped. Everything, to build a house, the cost of supplies, wood, sheetrock, all of that. And the bottom line is many of them cannot even get those supplies, right? And so that is why there is inflation, right? Because again, it really goes back to supply and demand. If you've got the same demand, let's just say you don't even have new demand, because the bottom line, we sitting in our homes, we're really not, it's not a lot of economic activity going on except for online. And if you look at what online retailers sold more online this year than they ever did in history. And if we were to look at the last quarterly retail sales, we will see that that is the only bright spot in the economy, because many of you bored, you can't go nowhere. So you said, man, at least I could have a little joy in my life. I'm gonna have Amazon truck roll up in here. I'm gonna get this, but guess what? You're not going nowhere. Right? Like you can buy everything you want to, but you're not going anywhere, right? But that's how you're getting your joy. Am I walking down your street, ladies? Because we live in the same life, right? We in our houses, we live in the same life. I think about Groundhog Day. You ever watch that movie where you get up, you go, you make your coffee, and then you be like, it's 10 o'clock, you go back upstairs, you sat down, did not do the same. I went up the same stairs. I might have changed my pajamas, but the same thing is going on, right? So this really is a volatility lesson. So because of that, even though you don't have increased demand, you have lower supply, right? So that is why the cost of goods and services are going up. Y'all with me? Okay, and so what I want you to understand that in Wealthy You, just like when COVID hit, we said, what are the companies that are going to do well in an economy where no one can go anywhere? And so we saw that. We saw DocuSign. Now you can, companies are even real estate people, which it used to, one of our one on our refinance, it might have been a refinancing or a closing. The lady came in our garage. She was in her car and she wouldn't come in because of COVID. But so I'm just saying things changed, and so it sped up digital adoption by many of these companies who before wouldn't even allow you to, do a sign. You had to go into somebody's office, go settle here, go sit in front of somebody. And so the business climate change and how you did business change because, at the end of the day, we live in a capitalist society and corporations are going to figure out how to make money. Now that's the bottom line. Okay, so with COVID, what we saw is that digital adoption in many industries sped up. And so you had like medical, right? Could you even imagine that you would call your doctor and they would say, hey, we ain't seeing you, but you could set up a telemed and, we could check you out online. Can you even wrap your brain around that? Like, I feel like we've sped up and we're in the age of the Jetsons. But my point is, so if we were to look at what companies did well as a result of COVID, we saw the numbers, right? We saw Zoom, we saw Netflix, we saw all of those companies because they had sort of a captive audience. Anything that any service that relieved any of that new environment that we're in did really well. And so we saw it in their stock prices, right? In their earnings. Okay, so now we're at another juncture, right? An economic juncture. And the bottom line is the reason inflation is so high is because of the problems with our supply chain. You guys get this? Right? So you got less supply coming in, even with the same demand, it's going to make prices go up. I mean, that's a fact, right? So, but at the same time, what did the Fed do when COVID initially happened? They lowered interest rates. They pumped a lot of money into the economy. They gave a lot of money to middle class folks, if it was the economic stimulus, the $1,200, because they knew that if you want to stimulate the economy, give some money to middle class folks and they're going to spend every dime. And that's exactly what happened, right? And so they do that to stave off a recession, right? Which is our GDP or growth slowing, quarter to quarter. Is this making sense? I mean, I'm trying to talk in layman's term and not be all heady. Okay. So now you got prices going up. You took interest rates about as low as they can go. What do you do to stave off inflation? Well, the only thing you can do is to raise interest rates now, right? Because you want to kind of slow demand down so that supply can catch up. And so that's basically what's happening. And so whenever interest rates start, okay, and then the other point I want to make is that how much are y'all earning in y'all bank account? That's what I want to know. How many of you have a savings account? I know all of y'all got savings account because that's the reason you're in Wealthy You, because I'm saying, listen, you losing money, sis. You gotta take it up a notch. That's why you're here, right? And so in the 0.5%, right, on a good day, right? Like pennies. That's right, Terry. Anita, I want to know where you earning 5%. That's what I want to know. Let us all know. Let us know that credit union, girl, so we can go open up us an account. Oh, you said 0.5. I thought you said 5%. See, that's why I got on these big old glasses, because I'm having glass prescription issues. But anyhow, so the point I want to make is that the reason that the stock market was so high and so there was so many people investing in the stock market is because of those low interest rates, right? So it really forced people to have to take on more risk in order to earn a better return. So it made, again, supply demand, not just earnings. I just want you, if you got more people buying anything, the prices are going to go up, right? More people selling, the prices are going to go down. That's just basic market economics, right? So interest rates were low, and so there was nowhere for the money to go but the stock market. The stock market goes up. Plus, the Fed was pumping in money like, corporations could borrow. It was like free money. They could borrow it for free. And so now you've got, it's kind of like the stars have aligned, but more like the chickens have come home to roost. And so now, in order to stave off inflation, because last quarter I saw inflation was at 5%, about as high as, meaning, overall prices had increased higher than that rate of inflation, higher than it had been in decades. And so that, it's kind of scary. So the way they stop that is by raising interest rates. Because if they raise interest rates, it's going to slow kind of economic activity, right? So, people won't, it'll make it harder for people to qualify for loans, right? Home loans, because now prices have, home prices are higher than there ever been. Is that like in your area? Nod your heads, lady, tell me, yeah, right? So, and that was because interest rates were so low that it made demand. And, the other kind of thing out of left field was COVID happened. And like me, I was downsizing. We just downsized from a big house. And then it was like, oh crap, we got to work from home, right? So now we had to like build a whole new level in this house that we thought we were going to get lower. So what is happening is it made a demand for larger houses. And so that was kind of like the thing that nobody expected would happen with COVID. So now we're here, ladies, right? So let's talk about where we are right now. And now we're here, and now we see that when the Fed starts raising interest rates, when things start getting more expensive. You've been to the gas pump lately, y'all? Right? Probably $10 more to fill up your car. And so what happens when prices get more expensive, when goods get more expensive, we don't buy more of them. You guys getting this? And so that's a way of kind of slowing economic activity so that the supply chain can catch up. And so what we're also seeing is, Netflix numbers came out and they missed their target, and they said that subscriptions were going down. They didn't get as many subscriptions as they had in the past, but Netflix is global. They are expanding all over the world. And what had they just did in the United States? Do you guys remember? How many of you have Netflix in the chat? Let me know if you have it. Right? How many of you have Netflix? Yeah. They increased their prices a couple of dollars. Right? So that's gonna, even though subscription is lower, I didn't look at their earnings, but I need to do that. But I already knew intuitively that then the market would punish any kind of subscription, any company that had a recurring subscription kind of revenue model. And that's exactly what happened, right? So, I'm trying to think of the other revenue models that were. So here's all I want to say to you is that so much of what is happening in the market right now is in response to supply chain, inflation, and interest rates going up. And the fact is, we haven't had a significant market correction, because when it happened in March of 2020, it was right back up by May, and then it took off, right? And so what you have to understand as an investor is that, are you an investor? Now, the truth is that in mutual funds, it's kind of, you get punished because a mutual fund is a broad, diversified portfolio. And typically, those investments, because you're a passive investor, you're at the mercy of the portfolio manager. And typically, your funds are going to do just like the market for the most part. But, so man, I've told you guys a lot of bad news, haven't I? But it's not bad. You know why? Because here's the other thing. Let me just do a poll. How many of you are investing through some kind of employer sponsored plan and have an account where you put money in monthly? How many of you in the chat put yes, no, if you do or you don't? Yes, 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 yes. Yeah, and you know why I know that's true? Because for many of you, that's the only reason you have any investments in the market at all, right? So typically you are investing monthly, systematically. And so one of the things that I'm going to challenge you with is to begin to look at your statements as the market declines. Look at all of your funds, and what you're going to see is that you're going to be buying more shares at lower prices, right? And then over time, when the market goes up, you're going to have more shares. And so the overall value of your portfolio will rise. And that's exactly what should happen. You should be investing when prices decline. And that's why volatility works in your favor. Now, it doesn't necessarily make you feel good when you look at your investment and you say, oh man, my portfolio's down $20,000. It's down $30,000. But here's what I want you to know. You don't lose unless you sell. Are y'all with me? Like, all of that is just values from day to day. And so if you're going to be an investor, here's the most important thing you need to understand is that wealth is accumulated by the number of shares, the number of assets, right? The more shares you own, the wealthier you're going to be. So I want to make sure that you're focused on the right things. Okay? And so in Wealthy You, we focus on turning our income into wealth. And in order to do that, we have to transfer our income into assets. And one of the ways that you transfer your income into assets is by owning shares of stocks, whether there are individual stocks, right? Or whether they're in a mutual fund. I want you to get this, okay? So you win this game, you win the money game, the wealth game, by accumulating assets. And so if that is true, then don't you want to buy assets when they're at lower prices? In the chat, agree or disagree? I love that, Laura. So you in there telling folks, chill, take a chill pill. Okay, now here's the other thing I want you to understand too. This is why it is real important in Wealthy You. One of the things that we encourage you to do is to also open up an investment account, a brokerage account, outside of just your retirement plan. And the reason that is important, and I want you to get this because I heard this definition and this guy, and it just blew me away because there was so much truth in it. So I want you guys to write this down. I hope you got a Wealthy You notebook that you're writing down so that you can come back to it. So write this down. Wealth is created through concentration, and it is preserved through diversification. In the chat, I want you guys to write that down so that I know that you got it. Because every time you begin to get afraid, I want you to think about what I'm just telling you. And that is that wealth is created through concentration, and it is preserved by diversification. So concentration means that if you look at okay, we can just take the billionaires in the world, because I think this is a great way of explaining this to you, is that if you look at Tesla, if you look at Elon Musk, he built his wealth through concentration. That concentration was through Tesla, right? And he started out making very expensive electric vehicles. And so once he was able to get all of acquire all that capital, then he was able to expand and then build less expensive electric vehicles. And so his wealth was built through that company, right? For you, your wealth may be built through the vocation, the career that you have, right? And then to preserve it, you have to diversify it, right? Like you have to put different eggs in different baskets. And so one of the reasons it's so important, and in Wealthy You, we encourage you to have investments outside of just passive investing, like mutual funds, that you actually learn how to analyze and research stock and build a diversified portfolio, is because it is then that you can identify specific investment opportunities, invest in companies that are going to give you that. How many of you have been in the challenge, and you've been in our portfolio challenge, right? And you've seen how if you had invested $1,000 in Netflix, that it would have grown to $51,000 in 10 years. Right? So some of your investments, in order to get that opportunity, is going to be more risk, certainly, but in order to really create wealth fast, then it most times it's going to require you to invest in individual stocks. And then once you've got that type of a gain, then you're going to diversify it into broader assets. Is this making sense to you guys? And so this brings me back to the point that I made.
$51,000 if I had done it way long time.
Right?
So you need to start now.
Okay, guys, I need you to mute. So here, I'm gonna bring this home for you guys. All right. So here's what I want you to understand: is that in any economic environment, there are going to be winners and losers. Right? They're going to be winners and losers. And in order for you to find the winners, you're going to have to be able to look at, okay, inflation is up. And in fact, I was having a conversation with Michelle, one of our ambassadors, member success advisor, who also facilitates our mutual funds. And she was telling me about an exercise that they did, where someone wanted to know what mutual fund to invest in. And she said, well, let's think about it. What companies are going to do well in an inflationary environment? Well, how does she find it out? Well, she Googled it, right? Because everything's Googleable. And so in the search engine, she put what mutual funds are going to do well in an inflationary environment. They found these 5 funds. She said, well, don't just listen to the article, let's research it. And lo and behold, they found opportunities. Many of those funds that they researched were doing well because indeed they were doing well as inflation goes higher. So that's my point. That is kind of like the point I want to put here, right? Is that, are you a trader? Are you an investor? And if you're in wealthy, you know you're an investor and you're playing the long game, because you're no longer thinking day to day. You're no longer fearful because you're already thinking about where you want to be 5 years from now and 10 years from now. And, one of the things for those of you who've just joined Wealthy You in our Wealthy You Society, the first thing we figure out is, what is your financial freedom number? That point at which your money will work for you. You'll have enough income, assets, providing incomes, whether it's your pension, Social Security. We take all those numbers into account. Then we see what your gap is, right? And once we know what your gap is, then it's about, there are only two things you can do. You got to make more money, right? And you got to earn a higher return. And so that leads me to one of the things we're really, really excited about. So let me just button this up. So in summary, investing in volatile times is like investing in any other time, right? It's like, here's the point. So when the market gets volatile like this, it really is a stomach test, right? And the stomach test is, man, I just saw the market go 20%. Am I worried? Am I staying awake at night? Well, then you may be overexposed to the market. And maybe that's not your risk tolerance. People often ask me, oh, well, what kind of investor are you? Like, I had one of my coaching clients want to interview me just about my philosophy. As someone who has been, investing for decades, what I will tell you is, I'm not an aggressive investor. I'm not. I'm middle of the road, Goldilocks. Not too hot, not too cold. Because very early on in my career, I traded options, I worked for commodity brokers, and I saw that you can make a lot of money fast and you can lose a lot of money fast. So I'm not interested in making a lot of money fast, because to me, fast money is an oxymoron, right? Easy come, easy go. But at the same time, I know that I have to take a certain amount of risk in order to achieve my ultimate goal of, ultimate independence and leaving a legacy for my two children, right? And so in order to do that, I have to take calculated risk. Are you with me? Calculated risk, and understanding what are the investments that are going to give me upside and will be defensive on the downside. And typically those are your very boring, blue chip growth funds, equity income funds, stocks that are paying dividends. Because, stocks that are paying dividends and growth and income funds, they have their own kind of dollar cost averaging, and they're paying dividends every quarter, and you're reinvesting those in more shares at different prices. And so that's sort of like an automatic, and it's so funny if I think about after I was chasing, I made a lot of money trading options, and then I lost it really quickly. And I said, that will never happen again, right? So the best thing you could ever do, well, the worst thing you could ever do is make a lot of money. Like, it's just like going to Vegas, and I'm not a gambler either, right? Like me, I think I probably gambled one time. We were on a cruise, and I said, and I think I won something like $100. It must have been in a slot. Once I got that $100, I was out of there. I was like, nah, I'm gonna count my losses. But long story short, you gotta know what your risk tolerance is. And now is a great time, with the market being volatile, for you to say, one of the things you learn in Wealthy You is, how much should you have in stocks? How much should you have in bonds? Right? So if you don't like the volatility in your portfolio, it may mean that you need to be a little less aggressive. But here's what I want to leave you with this, ladies, is you cannot save your way to wealth. It's impossible, right? Like, the biggest risk is taking no risk at all. The risk that your money will not grow. And so that's where many of you are, where, you've been risk averse, and now you're looking at this market and you're saying, oh my gosh, I knew I should never invest in the stock market. But here's what you're going to learn if you're in Wealthy You. You're going to learn that you are going to welcome downturns in the stock market because they give you an opportunity to acquire assets at lower prices, because you're not interested in the value today. You're interested in the future value of investments. Is this making sense to you guys? And so the point I want to make is that what wealthy people know that most people don't is that it is when the market has the greatest volatility and risk that opportunities present themselves. All right? So that's where I'm going to leave it with you tonight. So in the chat, let me know, what were your takeaways from this conversation? What were your takeaways? Okay, wealth is created through concentration, that's right, and preserved by diversification. That's right, Melissa, take some risk. No risk, no reward. Come on, let me see some other people weigh in on me. Weigh in. Stay the course, that's right. Are you a trader or are you an investor? Volatility is not always a bad thing. That's what I'm saying. You guys are getting it. And Karen, that's right. Don't be scared. Don't be scared. Wealth takes time. That's right, Jerry. Don't put all your eggs in one basket. Amen. Amen. Look for opportunities. That's right, Carolyn. Take calculated risk. You have to have multiple forms of investments, Lynette. Yes, yes, yes. And so, that's the other point I want to make. The reason that I created, we have a higher level program, Legacy Wealth Accelerator. Now, mind you that so much of my career was spent high net worth, tax advantage strategies, working with the really wealthy portfolio managers. And so what I realized, and I don't know if I ever told you guys this story. How many of you know why I started Wealthy You? Do any of you know why Wealthy You was launched? Anybody know why? Anybody know the backstory on that? You know why I started Wealthy You? Well, the truth is that when I left the investment industry, I felt like there was a knowledge gap. And so I thought I could, fill that gap by writing books. And so many of you know I wrote Confident Investing, a wealth building guide for women. First was Every Woman's Money, then Confident Investing, then Nickel and Dime Your Wealth, and then A Purse of Your Own, right? And I wrote those books because I felt like that we didn't get access to that knowledge. And so, I'm doing all these tours, I'm writing these books, and, my son would do strategy with me about, I was going in, I was creating programs for corporations, but my heart really was with helping women. And you guys know, if you read my book, Purse of Your Own, you kind of know what that story was about. My mom, and seeing how her life changed economically when she separated from my father. Okay. So anyhow, so I'm on it, and I find out that my mom wasn't the exception, she was the rule. And so I'm out here, and I'm financial empowerment. And, finally my son said, well, mother, like, people really need help. Like, this isn't something you're going to do on your own. Like, and you know what? Roland Martin gave me the moniker of America's wealth coach. Another high five to Roland Martin. And he said, well, mother, you're known as America's wealth coach, and coaching is personal. Why don't you take I had created this curriculum for a university. Why don't you take that and let people go through that, and then you give them accountability and support? And so initially, Wealthy You was me using the curriculum that now is the framework for the Wealthy You Society and the Legacy Wealth Accelerator, and coaching individually. And then what became really, really clear was that in order to achieve the mission of helping 1 million women, because that was the original number, but it was empower, right? Like it was a very broad term. It wasn't anything specific. There weren't any metrics behind that other than touching 1 million people, right? And so what became really, really clear was that if we were going to be able to make a huge impact, that there needed to be some key performance indicators like metrics, and that you would need to help people along the way, right? And so since starting Wealthy You in 2014, really 2015, from 2014 to about 2018, 19, I had coached thousands of women individually, right? Now, what became really clear, and I got to thank COVID for that. That's when we launched the Wealthy You Society. But here's what I want you to know is through those years, what had happened was, women were going from their first 6 figures to multiple 6 figures to 1 million, 7 figures, to some multiple figures beyond 7 figures, and some multiple now. So the reason I started the Legacy Wealth Accelerator was because when you start building those assets and you get to multiple figures, then new level, new devil, right? So now you got to figure out how to keep it and not give it to Uncle Sam. And so our Legacy Wealth Accelerator, many of the women that are in the Legacy Wealth Accelerator were in Wealthy You Society, but needed to learn how, and I'm getting back to the point, to diversify into other assets like real estate, right? Like early stage investing, like tax advantage strategies. But for me, what is important is that you learn the rigor around it. And so now I'm not teaching it actually, we have master instructors that are teaching real estate investing. We have a tax strategist that's teaching tax advantaged investing, because as you go up the level, you need to know what to do. Are you with me? And so the reason that Wealthy You is so important is that the accountability and support. Listen, one of the things I tell the Wealthy You ambassadors is we created this for you. Yeah, there are a lot of programs out here. I know that, right? I know that many of you are in these other programs or have been in other programs. But no program will give you the core of what we do, which is a framework and a system and a process, right? But also make sure that you get the accountability and support with member success advisors, that you have skill building every week, that you are building that muscle, that you're learning how to analyze and research stocks, that you're leaning in, that you can turn on CNBC and you can actually understand what those people are saying, that you can analyze and research a stock, that you can start a stock watch list, that you can open a brokerage account and you can actually place a trade, right? Where can you go? And that every Wednesday you can come and you can learn about current events, which is sort of what I'm giving you now, right? Well, that's free to the community, but also that you can have your specific situation addressed in strategic advisory, and that every quarter you can get access to a master class to continue to sharpen the saw and for you to get exposure to all kind of asset classes, whether it be Bitcoin, to learn how to up your salary. And, all of the experts come in. So, what we do and how we do it and how we innovate it, the Wealthy Youth Society that we started launched in March of 2020 is very different than what it is in 22, and we will continue to evolve with that. And so for those of you who are in Wealthy Youth Society, you're going to hear about some other ways that we're enhancing your experience. However, what I'm really, really excited about is that we have our new masterclass coming up. Tickets will be going on sale. The theme of our upcoming masterclass on March 12th, and you're hearing it here first, is the Legacy Wealth Virtual Retreat, Leveling Up to Accelerate to Seven Figures and Beyond. And so every one of our presenters are going to be showing you specific ways that you can level up in all areas, whether it's your career, how to package it properly, how to present yourself properly, how to level up in business and take your game up in terms of your networking and your ability to excel. We're going to cover it all. And so stay tuned, because we're going to open up a very limited amount of tickets to just the people in the Wealthy You Insiders who are already a part of our Wealthy You community before we open it up to the public. So again, mark that on your calendars, March 12th. Tickets will go on open up for insiders only on Friday. So you're going to be hearing a lot more about that. If you've ever been to any of our masterclass, we bring content that you can get you can't get anywhere else, because everything we do is actionable. Like, you can leave that place, you can apply it, and then you should be able to apply it and see a result, because that is what Wealthy You is for, is showing you results. Ladies, give me some feedback in the chat. Tell me, how does that sound? Are you guys ready to level up in 2022? Right? Because what I want you to know is Wealthy You is leveling up. Every week, you will be able to see us on Monday nights showcasing amazing women and their results. And I tell people I have a hidden agenda, and that hidden agenda is showing Black women doing what they always do, not what you see on TV, and that is holding it down, starting businesses at a faster rate, contributing to their churches, volunteering, being leaders in their sororities, leaders in their community. That's my hidden agenda, showing the women that I know. But not only that, we're going to shed a light on what happens when women are given the right knowledge and insight and tools to accelerate their financial growth. You know what happens? What always happens? I bet on Black women, because I know if given the right knowledge, insight, and tools, they will excel at whatever they do. And so if you want to get into what we're up to, you want to level up too in 2022, because I'm telling you, I'm so excited. I'm so grateful. I'm so grateful for this team and the things that they've been able to do. And by the way, before I go, I want to show you how we're leveling up and how we're going to help 1 million Black women get to $1 million in net worth. We can't do it by ourselves. We need you. And one of the things I want to really encourage you to do is invite your friends, your sisterhood, your sorority, your line sisters to join Wealthy You community, so that they can level up and accelerate their financial growth too. But we're also doing this as well.
Let's be honest, as successful women, we're crushing it. Maxed out 401k and Roth IRA? Check. Aggressive savings and investments? Check. Yet, the freedom our success was supposed to buy can leave us stuck on the six-figure hamster wheel, watching retirement slip further down the road. There's another way. Get coaching courses and community at wealthyu.com.
That's right. There is another way. That's exactly what we're going to do. We're taking it up a notch, ladies. We want to take you higher. We want you to level up. And so all I want you to know is we're so excited about 2022. So remember, we are Get Wealthy launches on Monday, March 31st. Let's show up and show out. You can go to the Black Star Network, blackstarnetwork.com. You can download the app. Monday, I'm still waiting to see what time we're going to come on, but of course, we're going to make sure we text you, we email you. Let's show up and show out. Let's do a watch party. I can't wait to see what's in store for Wealthy You in 2022. And ladies, I just got to tell you, welcome to the newest cohort in the Wealthy You Society. Welcome to our newest Legacy Wealth Accelerator members. And let's make this your best year ever. I'm Deborah Owens, America's Wealth Coach, founder and CEO of Wealthy You, where we help Black women build their first investment portfolios to 7 figures and beyond.